What's going on with UiPath stock? Now I get it. You might hate this stock. This was one of those IPO darlings from 2021. It came to the market in April. It was very expensive and it's caused a lot of pain to a lot of investors. But we want to focus on what could happen from this point on and not the past. So in this video today, I'm going to break it down. I'm going to provide some UiPath stock analysis. We're going to look at the earnings report and provide a review and an update for UiPath stock. Let's get started. So UiPath, it's up 5.57% today. In the past 5 days, it's down slightly. In the last month, it's up 16%. The last 6 months, it's up 32%. Year to date, 34%. 1 year, it's down negative 3.46%. Max, down 77.95% since IPO. This again was in April of 2021. And the stock actually got higher than that. It topped out close to $80 a share in May of 2021. But again, we don't care about the past. We care about what could happen from this point on. So is UiPath stock a buy right now at $16.49? This video is going to give you the answer. Right now it's trading at a $9.25 billion market cap. 52-week low, $10.40. 52-week high, $22.30. So we just had earnings last week. So this is non-GAAP EPS of 11 cents. That beat by 9 cents. Revenue, $289.59 million, up 18.2% year over year. That beat by 18.35 million. So $290 million in revenue. The ARR, which is annual recurring revenue, is about 1.25 billion. 122% net base dollar retention rate. Now that's a solid number. That's essentially keeping your customers and expanding the footprint within those customers. 21% revenue growth rate year over year, excluding FX impact. So the dollar is impacting this business. And the annual recurring revenue growth rate year over year, excluding FX impact, 28%. They're trying to highlight that because they're telling you if the dollar didn't have as much volatility, you would have had higher growth. And they're showing also that dollar-based net retention 5% higher as well without that FX impact. So initially, UiPath sold off on this earnings report. It was down 11% last week on Thursday. And the reason really came down to guidance and just digestion. So if you look at their expectations for second quarter, range of $279 to $284 million. So the midpoint is below consensus of $284.32 million. So here it says the weak guidance from UiPath overshadowed its first quarter results, which topped estimates. They beat again on top and bottom lines. So earlier we talked about FX, so foreign exchange adjustments. The company has a high level of international sales. In fact, 48% of sales were international in fiscal Q3 2023. So this stock has been very volatile and it has a lot of volatility attached to the dollar as well in FX. Now, whenever I do videos like this, I like to talk about the pros and the cons, the bear and the bull case. The most obvious thing that sticks out when you look at UiPath is that if you look at the growth, it's actually been declining, but profitability is starting to go higher. And so if you look at this, they delivered positive non-GAAP adjusted free cash flow at the outset of the year. But the financial metrics are improving. The growth has been slowing down. Now, the bull case here is two things could happen simultaneously that could make this stock go higher. We'll talk more about that later on the video. So you can see they've signed some new customers, Liberty Bank, New York City Health and Hospitals, and a few others here. And large customers with $1 million or more in annual recurring revenue increased 43% year over year to 240, while customers with $100,000 or more in ARR increased to approximately 1860. Talks about one of their bigger clients, Colgate, more than 70 automations across various departments. Now, part of the reason the stock went from selling off to green is it got on board the AI hype train. With that said, AI is not new to UiPath. And it's why we included UiPath in the top 10 AI stocks to buy for the next 10 years. We were trying to identify high conviction platforms, companies that can grow over the next decade, and UiPath was one of them. Now, it wasn't high on the list. It was basically 10 out of 10, but it is up about 35% since we did that video. In fact, if you look at that video we did back in January, we did that mini series, top 10 AI stocks to buy for the next 10 years. Here are the stocks on there, and you can see they've crushed it. In fact, if you look at equal weight performance year to date, up 69% as a basket. You can see UiPath here at 34%. So this is the earnings call transcript. Since inception, our platform has been infused with AI. We offer our customers best-in-class models, read communications, understand documents, and see screens and interfaces. Coupled with the next wave of generative AI, we can help customers make automation even more accessible across their employees and significantly expand use cases. Equally as important, our automation platform provides the guarantees, guardrails, and governance our customers require to deliver generative AI safely. And they go through a bunch of different examples on this earnings call. Now, what's interesting is in Discord, I told the group I thought the call went well, and I was surprised the stock was selling off because they talked about all the right things, especially in this market when everybody wants to hear about generative AI. But the stock sold off anyway, and I could spend a lot more time about the different AI uses. There are a ton of them, but I'm going to do a quicker video today. One of the main reasons that the stock started to flip, I'll talk about that in 1 second, but there's one more thing I want to cover really fast regarding AI from the earnings call. So Daniel Dines, this is the CEO. And earlier I talked about Inception, and you might think, well, Inception, they just came public in 2021. This is a new company. This is not a new company. UiPath was founded in 2005 in Bucharest, Romania. So this company is nearly 20 years old. So the CEO here talks about their newest platform release. Further accelerates our customers' ability to discover, automate, and operate at scale, and continues to expand our leadership position in UI, AI, and API automation. This is a platform that uses AI, artificial intelligence, robotic process automation, RPA. Our customers are very excited about this new release and our plans to use generative AI to further increase adoption of our platform. We believe that generative AI will be a very important part of enterprise AI foundation. This is key. This is critical. When I talked about AI stocks in January, I was trying to find platforms. So I'm talking about platforms where enterprises, businesses can use those. So there are a lot of companies that use AI. Like Spotify uses AI, but they can't scale that and sell that to thousands of businesses like a UiPath can, like a Microsoft can, like an Amazon with Bedrock, with Google Cloud Platform, NVIDIA, and so on. Generative AI is very powerful, but by itself has limited scope of capabilities in the enterprise. It can read and generate text, but not take action, for example. Now listen to this. AI without automation is like a brain without a body. So they're saying that you're going to need a platform like UiPath to put it all together. When AI is combined with enterprise automation platform, it opens a whole new set of use cases and opportunities for customers. Our software robots can already read screens and documents, and now with generative AI, they can answer customer emails, create summaries of complex documents, and respond to support questions. So it's going to make their platform even more powerful, and there's going to be partnerships and integrations where these different tools will work together. One of our biggest competitive advantages in leveraging the power of generative AI is our long-term investment in AI computer vision. With computer vision, we understand screens from legacy to modular in applications, and our knowledge of screens continue to grow exponentially with more than 2 million calls every day to our AI computer vision service in the UiPath Automation Cloud. We are uniquely able to combine this understanding of screens with the cognitive intelligence of generative AI to watch what happens, understand what's being done, and automate it in our enterprise-ready platform. And this is big. I think part of it was digestion. The market took a minute to figure this out, but another thing that was a catalyst here I was mentioning earlier. Now, I'm not saying that if ARK buys something that you should too, or it's going to necessarily move the markets every time. But what was interesting is they did buy UiPath. They bought it in every single one of their ETFs. You can see ARKK, ARKQ, KW, KG, KF, KX. I think that's all of them. They bought shares of UiPath, and pretty significant amount of shares as well. You're talking about up here, you got 3,126,000, 318,000, 421,000, 715,000, 292,000, and 90,000. So this is on May 25th, and I added it up. It's 4,965,554 shares. So just under 5 million shares purchased by ARK Invest. Now, I think that got the attention of some individual investors as well as a few different hedge funds. And if you look at some of the volume kind of started right after this. I'm not saying it's the only reason, but I think it's interesting interesting, and I at least wanted to point it out. So UiPath is starting to release more tools that work with their existing platform. One of those is UiPath Clipboard AI. I'd like to introduce you to Clipboard AI. In the world of automation and artificial intelligence, making it easy for non-developers to easily create automations is no easy task. In 2019, we introduced Studio X to unlock a new class of citizen developers. In the coming weeks, so this just happened here recently, we will introduce Clipboard AI, breakthrough tech that will finally unleash individuals to leverage powerful AI tools right on their desktops with absolutely zero coding required. This is AI for the rest of us to free up the best in us. We are freeing workers from the task of mindlessly copying and pasting data from one screen to another, from one spreadsheet to multiple applications, from a handwritten document to a handful of databases, from a scanned official document to a dozen official systems. Finally, healthcare workers drowning in documents can be more productive and they can spend more time with patients. Retail store operators will spend less time uploading information after hours and more time with their families. Public sector workers will spend more time meeting with people and less time in front of screens. So they have a preview site and it includes a bunch of demos and videos that bring it to life, that show you this new technology. So listen to this. With Clipboard AI, we are putting AI from UiPath, ChatGPT, and other powerful machine learning technologies to work. So this is really just starting to roll out, starting to bake out. And this could be huge for UiPath, say, 3-4 quarters from now. You might start seeing some significant revenue from something like this. So we talked a little bit about customer momentum. You're seeing some good momentum here, especially with the larger customers. So this is the UiPath business automation platform. Discover, automate, and operate. Now, last week I did a Snowflake video and I mentioned this briefly, but here's some strategic partnerships for UiPath. Snowflake, pre-built solution for their manufacturing data cloud to instantly connect data to business processes without using complex code. Also partnerships with T-Systems and SAP. So for SAP customers, enables organizations to improve efficiency and productivity across SAP and non-SAP workloads. So this is that platform release that we talked about. OpenAI Connector, AWS SageMaker Connector, new AI connectors for leading services from Google and Microsoft, Clipboard AI that we mentioned, new communications mining, AI computer vision unified targeting, and more. So AI-powered automation, discover opportunities, automate more, and supercharge productivity. And this is showing you how UiPath can help you use AI across your entire business. We talked about this earlier, Clipboard AI, any source to any destination. This could be really powerful. And the growth has been slowing, but you can see a 42% compound annual growth rate here from 2021 to 2024. So next we're going to look at valuation. We're going to look at some price targets, some analyst targets too, just for fun. I'm also going to provide commentary and my thoughts as well as a chart. Now before we do that, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. A reminder, Fool doesn't tell me what to make, what to create, what stocks to cover. They're a great partner and check those guys out. You can also join our private community, Discord Patreon, by visiting patreon.com/firedupwealth. And if you're new here, I'm trying to get to 40,000 subscribers. Please subscribe to the channel, click that bell for notifications. And if this is helpful, drop me a like and drop me a comment. Let me know what you think. So UiPath trading right now at 1627. It's up 4% today. 52-week range again is 1040. That was back November 4th, 2022. And the 52-week high was $22.30 back about a year ago, June 27th, 2022. Market cap on this, it's a mid cap, about $9 billion, $8.76 billion. Short interest as of May 15th, 7.47%. So if we look at growth, EPS, pretty solid here. You can see 73% and 44%. If you take that, zoom the lens out a little bit more on 3 year, it's negative 15.66%. So this is improving significantly. EPS growth, 132%. You can see the revenue growth, it still has decent growth, but it's not hyper growth or anything at 16%. And so this is one of those stocks that has a premium valuation. It doesn't really have the growth to support it necessarily. And then free cash flow, TTM, 94.3 million. So this is where Path gets very interesting. It's also why you need to look at lots of different things when you're analyzing stocks, not just one or two different numbers, or look at a PE ratio or price to sales. So you can look at this and say price to sales ratio is 7.84 on Fidelity here. That's pretty expensive, right? Price to book, 4.45. Well, oftentimes if your PS ratio is 7 or 8, you might have a higher price to book. So this isn't a cheap price to book, but it's lower than you might expect. But this right here is where it starts to get very interesting from an investor perspective. We talked earlier about how they're improving EPS profitability. They're really tracking towards being a profitable company. Now, Palantir just went through something very similar to this, right? Where it was just a price to sales type company. Now, all of a sudden, boom, we got some profitability. Now, of course, you have to remember we're talking about non-GAAP and things like that. I get it. But based on Fidelity here, so PE, next year's estimate is a 40.5. Now, 40.5 is certainly not cheap, but now again, you're talking about SaaS, you're talking about recurring revenue, you're talking about an AI platform and a company that could be profitable very soon. So what happens if growth starts to accelerate again and you start seeing uptrend in growth from these different AI tools, and at the same time, the company becomes profitable? This could play out very similar to how Palantir just played out, and it's up 135% year to date. So I do own shares of UiPath. I own it in the main portfolio as well as the community portfolio. And before this news even came out about their new AI platforms, we had this as a top 10 AI stocks for the next 10 years. Really, in a nutshell, what happened is this is one of those stocks that came to the market, very frothy valuations, very expensive, overpriced. And retail investors, we got burned in 2021 with IPOs, right? Pretty much all of them came to the market really expensive. You had a lot of bad ones that didn't even have any right being public. A lot of them went SPAC. This was an IPO, and I think it's a good company. It was just really expensive. Institutional investors, institutions, accredited investors, shareholders, they all got rich off the deal, and retail gets left holding the bag. And so a lot of you might be holding this and being down on it a lot and saying, should I just sell it? I think honestly, at this point, you might be better off holding onto the stock. And if you don't own it, it could be an opportunity to buy it as a new position here, as something that really could be an interesting turnaround type story for 2024. Again, this company was founded in 2005. And you ask yourself, why didn't a lot of these companies come public sooner? Well, the answer is if you're a big shareholder, you're an executive, and you see a huge payday, you're probably going to take advantage of it. And you'd probably do the same thing if you were in their shoes. But what that led to is a lot of elevated IPOs. And I think it was easy to get blinded by that. I got burned on a few IPOs, including this one right here with UiPath, but I'm still holding it long. I'm down on it on the main portfolio. We're up in the Fired Up Wealth community portfolio. And I think this stock with time is going to be a decent stock, but it's not a hyper growth stock. It's been around 20 years. And if you're investing in it now, you're investing really on the speculation that they're going to have a big kind of wave with AI and that they're going to sell more and more. And I think that is a good possibility. So quickly, let's talk about some risks for UiPath. I'm also going to look at some analyst price targets. So one big concern is there's been several key executives that are departing UiPath. The biggest name is probably Chris Webber, not the basketball player, but the chief business officer of UiPath. This was the first CBO in the company's history, and he was charged with expanding the e-commerce side of the sales funnel at the company. He'd only been there 1 year and he's leaving, and there's questions about why that is. Maybe he already did the job he needed to do, or maybe he's going to better horizons, or maybe he just doesn't want to be at UiPath. And several other key executives, including their chief product development officer in February 2023, and really just the executive management team is a risk in itself at UiPath because they have quite a few high-level, highly paid C-level executives. You can see the list here on your screen. So that's 13 C-level executives, which includes the 2 co-CEOs. And that is a lot. Another concern is stock-based compensation. This is another one of those that's been very high, and it's very common with an IPO. Now, the positive note is that has been slowing down a bit, and that is a good thing, but it's still pretty high. A reminder that you never really want to buy off analyst price targets. We like to look at them really just to get a feel of the market and just overall sentiment. You can see the highest price target is $27.50. The lowest is $16. It's trading about that right now. And the average price target is $18.89. So next I'm going to show you a chart really quick. Again, make sure you subscribe to the channel, click that bell for notifications, drop me a like and a comment. And we do what we call chart day every single Wednesday in Discord Patreon. The community picks 20 tickers and we look at stocks every single Wednesday. So when you see orange, that's a previous chart day. Yellow is today's chart day. You can see the stock was, down here at $10. And when it popped, we said $13 support, watch $15 to $17 on the upside. So a lot of us were buying this stock between 10 and 13, 13.50 in Discord. And now we have that $16.31. So this was a great call here earlier in the year. Now what we've got right now is a $15.10 support, watch 18 plus. So these are Fibonacci's. You can see it's kind of getting up to this R2. This R3, resistance 3 is 1887. That's probably going to be the next stop if the market continues to be bullish and the stock keeps going higher. So this has 15.10 support. It doesn't have to be a straight line. It could sell off from here to $15.25. As long as it holds 15.10, there's a strong chance you're going to see 18 plus. And on continuation, you could even see it in 20. I'm not saying that's going to happen overnight, but you can see on this Fibonacci retracement, here's where you want to be buying the stock around $12. And, this is kind of the target range up here. So if you're swing trading, this is where it starts to get, a little bit unknown up here and you get in this area, but this generally plays out pretty well. So if the market stays bullish, if this stock stays bullish, it's probably going to keep climbing between $18 and $20. I like this stock long term. It's not cheap here, and I prefer to buy the stock lower, especially because it was lower recently. But if you buy the stock at $16, I think it'll be worth more than $16 by the end of this year. Now, of course, I could be wrong. We could go into recession. All these could sell off and retest. So you'd want to use dollar cost averaging, and this isn't financial advice. These are just my thoughts and opinions. I hope this video was helpful. Make sure you subscribe, click that bell for notifications, drop a like and comment. Have a great rest of your day. Take care.